Welcome back for the 13th episode of CBA's Talking Economics with the Commonwealth Bank of Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure.
So the RBA left rates on hold this month, as CBA had expected. What's the latest data telling us?
Yes, so it was good to see the Reserve Bank keep rates steady at 4.1% this month. Since then, we've had our own household spending intentions data for the month of June. That declined by 1.7% on the month, and not surprising to see some softness in consumer spending, particularly in entertainment, health and fitness, and travel. And we've also seen our trade surplus for the month of June actually quite strong. So exports are up 4% on the month, led by things like gold and coal and gas. So that was very positive to see.
Upcoming data, what should we be looking out for?
Well, between now and the next Reserve Bank Board meeting, there's really two key data points. Employment for the month of June will be out on the 20th of July. That was very strong last month, nearly 76,000 new jobs created last month, and the unemployment rate down at 3.6%, so it'll be critical to see what's happening with the labour market. And then on the 26th of this month, we get the inflation reading for the June quarter. Now, we know from the monthly CPI indicator that inflation is beginning to moderate. Last reading was 7% for the March quarter, so we'd like to see a meaningful reduction in that number, perhaps to around about 6%. So they're the two key data points between now and early August.
And finally, interest rates. What is the outlook?
Well, after pausing in July, our base case is that we will get a final rate hike in the August board meeting after those employment and inflation numbers that we just talked about. It's going to be yet another line ball call, but we think one final rate hike is the most likely outcome.
Interesting to see what happens next month. Stephen, thanks for your time.
My pleasure.